Okay, hey everybody. So New York, Bitcoin. Firstly, not much has changed. My opinion this morning was that it wasn't going to drop. It did, um, which just hasn't really dropped much. And if you look on the daily, if you look on the daily, it's actually coming back into. I tell you what, let's bring up a nice clean chart, shall we? There we go. So we go on the what the fuck? Oh wow, I've got to update that one, so I have to keep that one. I like this one. Um, maybe here, this one. Zip this across. Daily. So we know that we had the range low in here, didn't we? And it's back inside. And if you're going to focus on price recency, you would say that this was, of course, is here with the failure pattern, but look, this was resistance, wasn't it? Resistance, resistance. Prices are now smashed above. So we had this period of consolidation, regardless of the levels. There was this consolidation in there, isn't it? And you had the breakdown, and this is a typical Will Hunting pattern, right? I used to trade this all the time. Break down and then break above. So that's the trap. Yeah, that's the failure. That's the deviation. Once it breaks above, that's your entry risk. Risk at the low there. And this is now sitting on top of support. Sitting on top of support. Hasn't really taken a key high out, has it? It's still possible it completely collapses from here. And this candle currently could be that one. Very possible. But the fact of the matter is, it had a rounded bottom, and it's gone flat, 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 flat. Breakout. If it was to come back through, I mean, could it be any more bearish? That would be over then, wouldn't it? That would be completely over. So I actually think this support level might hold, and it will all be dependent, I think, on what SPX does. Okay. So if SPX continues up, which I think it will, I don't see why it's going to stop here. It's now, every candle is now starting to look bullish. There's not really much going on until the gap fill, to be honest. No, I think that's, you know, you focus on right to left. You can keep looking left and left and left, but really, there's not much resistance. I mean, there's only that there, but what's more important is the fact that this is a gap fill now up to here. This is why people have been short in every fucking level over here. Every level, they've been short and short and short and short and short. And all it has been doing is just filling the gap all the way back up because right to left is more important, okay? Rather than looking at what has happened over here and then going, oh, I'm gonna take a short there because that's now in a resistance 3 years ago. No, not important. Anyway, back to Bitcoin. So with I don't know what positions you're in now, and I don't know why my levels have gone over there, but we'll hopefully wait and they'll hopefully come back. Okay, there we go. So this now, if we're looking at this really, this has taken out the low there. So what now? There's no low until back, all the way back, full retrace. So what do you think it needs to do now to be bullish, or for us to even to consider a long? It needs to break the low, doesn't it? The low to create the high. Nice and easy. If it does that on H6, oh God, really? I don't even use them time frames. 6H. Hmm. I still think it's gonna. I still think it's on daily support. So, and um, even on even on the H4, you've got that range high we were using, which was nice and clean, sitting on top of that as well. This is a really, this should consolidate here, but what I want to talk about is a trade we're going to try and get if it sets up, which would be here. It doesn't yet kind of look like a top. It doesn't look like you always have to assume continuation, especially when you had a breakout like this. It's a little bit different to a normal one. It's grind, 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 pop. You don't really expect these to immediately fail. It's the ones that just, yeah, it's the ones that just pop up with no real, like this one. Now this one just broke out of the range that it was in there. It was sitting in there, wasn't it? It broke out and just rallied up and went flat and dropped back down. There was no real bullish price action. This was probably a gap fill short squeeze. A lot of shorts when the price was grinding down here. There was a lot of shorts on there, um, and it filled the gap. It was more of a gap fill rather than actual bullish price action into it. There wasn't none. Okay, there wasn't any. Whereas this one went for a week grind, 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 grind. That's why I think it has a better chance of holding, even though it looks a bit shit, but I think it has a better opportunity to hold than previous examples. Also, you have the obvious trade is to short this move down, which is happened the previous 4 times, right? 1, 2, 3, 4. I mean, the obvious trade has been boom. Now, what about if this one's the shift where it goes up here and gets everyone really, really bullish and then back down? Maybe that's possible. So, what are we looking at? If this breaks back up here today, okay, because we are in a range, which is there, and uh, that's the key. That's the key low, which is taken out. Okay, that's the key low there. But the actual range low is probably in there somewhere. Just looking if that was the consolidation breaks inside. It's somewhere in here. Yeah, something like that. Very subjective, these ones at the continuation pattern, but you're looking for the first brick wall it hits, consolidation. Once it gets inside, that's your anchor. This is an anchor. Very difficult to find. Many of them don't occur too much, but you get the breakout, pulls back, and it finds support, resistance, resistance, support, breakdown. Now it's quite simple. If it breaks this high, I think it increases the probability of the low being in. Anchors, because it's broken out, you have to go with the flow of the market. So if it breaks up here, I'm going to take a long. If it then breaks up here, that's the next entry, and the targets are H1. Where's the gap fill? Gap fill there. June's mid-range, pink, but I don't think it gets that far. I still think it can go up to 9.5, 9.6. Okay, what would be the short? The short is nice and easy. Short is very easy. So is that clear? Okay. So if it does this, because it's very possible it's put a top in here, right? Yeah, it does have a kind of a triple stop in there. Okay, 1, 2, 3. It broke down. For me, it's just probably having a corrective red day, but we don't know. Okay, what we do know is it's broke down, it's pulled back, and it's filled the gap. Okay, here was the down move. Where was the up move? Well, the selling was happening, pushed the market lower, pulled back into it. That's the gap fill. Okay, if it now breaks this low, I would consider the possibility of it doing the pattern I showed you. What market done it? Some markets just recently done it. What was we looking at? UJ. Oh, you fuck it. That's gone all the way to target, isn't it? Is anybody still in? Is anybody still in the UJ long? We're going to come on to that in a moment, and that will go over that strategy, which is no, okay, no problem. If you're not in, doesn't matter. I fucked it up, like I fucked the other 3 trades up as well. Did it hit target? Oh, you're joking. That's even worse. Fred is in. Okay, so anyway, but if we drop this to the yeah, if Bitcoin this, okay, here's the big move up, even though it has a different it was no grinding base before it broke out. This one was just a rip into highs, but doesn't matter too much. Okay, the fact is, if this actual move wanted to do, the objective of price here was to take out previous week's high, and it done it in the Tokyo session on Monday. Took out Friday, Thursday, previous week's high. That was what the objective was with the fast move. Currently, Bitcoin has done the same, hasn't it? It's fast move up, not obviously not on a Monday, but fast move up. It's taken out tons of highs, previous week's high. Okay. Now, if it does, and if it breaks this low and breaks back in this range, then I think it does this. I think it does. I think it does that. Comes all the way back to the base of where it broke out, which would be here. Okay, I think it would do that. Okay, so this is the key level, and you've also got the daily support, which is sitting on top of, which is here. Okay, any questions? You know what you're doing for longs and shorts? Because it's getting late here now, 9 p.m., so I'm not going to be around until tomorrow. Okay? Moving on to FX. Right, let's take a look. Fuck. Yeah. This fucking market, honestly. So, dollar yen. Did it hit target? Not quite. Well, it filled the gap there, but that wasn't my target. Actually, it's a little bit higher. My watch tells me to stand up every time I sit down to do a stream. Has anybody got an Apple Watch? Just always buzzing at me. Right, so let's take a look. Okay, so my problem initially this morning was that, well, I had a feeling it was going to do this. Right, this is why I took the trade, obviously, and this was, but what actually happened was, if you look, it took the highs out here and then dropped and broke out of this range. But I thought it might pull back even into there. There was a gap to be filled anyway, and it was a good. It had filled the gap to the downside, and I thought it could bounce. I don't see why not. I thought it was a good trade. So if we drop down to the H1, oh wow, it is close. First, we have the gap. Okay, so it broke down. So what happened? I think it's M15 here, isn't it? The gap fill. So here, okay, here was the pattern. Okay, the pattern you use, which is takes out a key low, which this did, drops, takes out a key low over here. You get the pattern, but it never comes back and retests it and gives you an entry to go long. That is called that's just a liquidity gap. Call it an unfilled gap, whatever you want, okay? But it hasn't actually came back down and given you the retest to go long, and it's left it open. This is why the short at the beginning of the week, the limit order off this level, it was targeting here. And if the market is, and we also know to confluence that, we also know that the chance of UJ taking out the high and the low of the week is 12%. Doesn't happen. Okay, so that's why it was good to have this as a target, not this as a target, because sometimes the market can drop all the way down and have a bounce back up, and also it confluenced my reasoning to take the long rather than waiting for it to take this low. I know that's low probability, so I know the potential of a reversal is high. Okay, 88% potential reversal before it tags the low. Basically, that was the odds. Okay, so now we have the gap fill, which is this level. Okay, so I'm just going through the levels with you. Now you come back to the H1, and we have fast move down, which means what? It leaves no resistance on the way up. Yeah, if it does decide to reverse, it leaves no resistance. So it's very important you pay attention here because this is the strategy. So you have, boom, there's your gap fill. We'll change the color of that to pink as the target. Okay, that's the target for today. Would you agree? Okay, you can see why that would be the target. Anybody? Yeah, okay, makes sense. Right, so now let's drop it to M5. And what do we add in next? What we add in next is we take a look at the price action, we have a look what's happened, we put the daily open here, then we add in our session open. Okay, very, very important, especially on UJ. And I've explained to you before that UJ likes to do what with the session open? I've shown you it a few times, especially the last few weeks. You get this the session open. Um, the last 2 weeks has been, well, I haven't gone back too far with it, but the last 2 weeks you get, not that one, but let me show you. Yeah, it drops, doesn't it? And then it recovers. Like it does it in Tokyo almost all the time. So if I go, yeah, so here, what have I done? That one. So it likes to dip, and then once you get the recovery, that's what the trade. That's the trade for you. Okay? And it was doing it all for, it just keeps doing it, doing it, doing it, doing it. It's very, very consistent. Um, and even here, it puts in a high and then gets the other side. If you follow this all the way back, it just keeps doing it and doing it, doing it. Same thing. It drops low early or high early, and then it will, and then it recover, pushes up high early. Once it breaks under, there's your risk sell, right? And we went back weeks and weeks and weeks. It works anyway. So session open, okay? We had the drop, but what is important? What happened previously? What happened previously was you had this is our gap fill, okay? So we now got our session open on there. Now we can drop to the M3. Why drop to the M3? You can drop to the M1 if you want, but I like the M3 because it allows me to get my risk even tighter. And I prefer these structures on the M3. I think they're quite clean and nice and tight. So now what you've got is you've got a low's been taken there, okay? Um, and then where's the high that created the low? Because all the way down here it was taking lows, but the highs were holding, holding, holding. And here you got the first. It's like an imbalance in price, right? It's like a shift. Yeah, so takes out a low. We're into a key level, gap fill, objective complete, break, break. Okay, not important to get the entry, not important at all. Okay, this is your bias builder. Okay, so number one is your bias. I don't know what I've just drawn there, but that's a pretty good number one, isn't it? That's your bias. Okay, so now you can say, okay, we took out a low, and for the first time on this little drop, we broke structure. Now it gives you a bias for you to take into the next session. You don't have to enter here. Okay, you do not have to enter here. In fact, it's better if you don't for this particular strategy. You can absolutely do that on the M1 like you're doing. There's nothing wrong with the other strategies, okay? Nothing wrong. But for this one, I like the second confluence of having a session open, which is marked wrong. Oh no, it isn't. It's because it's M3. That is correct. Having the session open, having the first confluence, which is the first break. Of course, price could just rip away. But here, what you have to think about, and I've back tested this and forward tested this loads, okay? And what I've noticed is if you took the entry here, okay, on the first one, okay, what would happen? It would go flat, flat, flat through New York, New York, New York, not really do anything. You'd probably close the trade. Or it would go to one of these highs really quickly and you would close the trade at 1.5 hour, okay? And if it pulled back, you'd be out. So generally, I think with this particular strategy, I think it's better mentally and emotionally to let the let the reversal build, okay? And it gives you more confidence when you come to your entry, which we'll move on to. So now you have confluence one. So you have um, potential reversal. That's the most important at a key level. objective completed. Then you have the session opens. Okay, none of this is important. This is all just noise, but we are getting we're getting highs, lows, high highs. Then when the session opens, we get the drop underneath, and then it recovers. But what does it do? It takes out all of the lows over here. Takes out all these lows. Drops in, takes all the lows out. Where's the high that created the low? Here. Okay, so we now have second confluence. Do you have to take the entry there? You probably wouldn't have got an entry. Also, I didn't want to take an entry in the middle of the session open. Yeah, so happy to wait. Market breaks away. You've now got 1, 2. It's taken out all the stops over here. Now you're above the session open. And then this one, what did it do? Where did I enter? Yeah, okay, so once it was actually trading above the session open here, I entered, I think it was around here. Yeah, I think that was the entry. It wasn't there, it was there. So once we'd got that, I entered on the session open rather than one of the patterns, but that's fine. You can enter on the pattern as well, but I preferred to enter on the top of the session open. Um, and I thought it was a good entry. I knew where my risk was. So um, my risk was here. I've still got the I don't know if I've got a screenshot, just so you know that I did actually take the trade. Wait, where is it? Okay, there we go. I recorded it. Ah, shit. Are you going to be able to see this? I don't think you are you? Okay, I'll screenshot it. Because when I change the screens, it doesn't let you bring it in, does it? So if you look in the general, oh, sorry, the live stream chat, actually, that was the trade. I did take it, obviously. Um, Great entry. Very happy with it. Anyway, so I entered on the top of the session open, and this is the discretional part. Okay, this is a unique example because actually most of the time you'll be entering on the second pattern. Okay, this you're looking for. So just to go over this one more time, this for bias. It just so happened that this happened in New York. Sometimes this will happen in Tokyo, wherever. So there might not be a session open there for you to use as confluence. This particular instance, we got the failure, we got the stop run below the session open. I didn't want to enter here because it was in the middle of the session open. I thought, why not wait until it's above, give you even more confidence in the idea. So I waited. But most of the time, your entry is going to be on the second break. Okay. On the second, we're going to call this high low. Okay. On the second high low. You have your first one, then you wait for price to develop, and then this might be further up. It might have actually gone traded up, and then you got a stop run in there, and then you got the break there, and that might be your entry. It doesn't necessarily have to go sideways. They're all going to be different, but what you're looking for is the same thing. Before I move on, do you have any questions? So I find the gaps on the H1. I'm going to make the lesson, okay? But I want to put in live examples of me actually taking the trade, hyper time lapsing it so it's really, really fast. So like a 4-hour video will be like 3 minutes long. Um, you can do that on QuickTime. I found out today, 60x, pretty good. Um, and this one's now going into target. Look at that. Second high-low break has. Why would it be the opposite direction? What's the first one? What is the first one? The first one is bias, right? So you're now waiting for the market to give you the second one. And when it gives you the second one, you enter. and it doesn't matter where it is. And this always, and the nice thing about this is it actually gives you opportunity to compound because you can catch a trend. I'm going to give you lots of good examples, okay? This was one this week, okay? There was two this week on UJ. Look, I mean, look at this. But let's come back to this for a moment before I forget. So, and then what did it do? What did it do, right? I'd taken my entry and our target was, let's get rid of this. Really disappointed. I closed it and I'm very, very sorry. That's the fourth trade this week I've closed early. There was the target. So 3 hour, very, very good trade. Dipped in. What did it do after it broke above the session open? So even if you don't have the session open on, what you're looking for is the market. What I've always said to you about the market, when it wants to go up, what does it do? Or when it wants to go down, what does it do? It'll take shorts out, wouldn't it? It'll stop run, break structure, stop run, break structure. Yeah, when it wants to go up, what will it do? Stop run, break structure, stop run, break structure. Takes the stops, breaks the structure. Takes the stops, breaks the structure. Creates a low, moves away, stop run, takes the stops, breaks the structure. So you would say that's the high in there, right? High that created the low. So it's done it again. And once it does this, you don't have to use limit orders because it's FX. So whether you entered here, here, or even here, even if you entered here, and let's say you entered market once it gave you this one, it's still a 3 hour trade. See, and this might go even further. And now you can say, so okay, something that's very, very important, which I forgot to mention, and the reason I'm doing this because actually I think FX is a load of shit, so there's no point in looking at it. Might as well go over something that's very, very important, and then you can go and take a look at your pairs and practice overnight, and we'll come back to the FX market tomorrow. But one of the most important things, which I forgot to mention, is the first one is the only one that needs to take out a key high, low, or fill a gap. Okay, that's the most important one. The second ones, you're just looking for a stop run on some lows. You're just looking for price to create some lows. Create some lows, boom, trades into them. Create some lows, boom, trades into them. I mean, you can see clearly. I don't want to say manipulation because I hate that word in trading, but you know that dropped in there to take that liquidity, didn't it? Straight in, boom, took the liquidity, big bounce. I mean, that's clear as day. So that's all you're looking for is little stop runs, okay? The first one you want into a previous weekly high, previous weekly low, previous daily high, previous daily low, weekly open, key SR, monthly open. I haven't tested it on the monthly open to be honest. I'm not sure they're that important. I prefer key swings, which are previous weekly high low, previous daily high lows, or if it's completed an objective like this, bomb is filled an objective, then you look for the reversal. So the most important one is the first one. It builds your bias, takes out a key, swing. Second one, you're just looking for a little stop run, and then you get your little microstructure break. And this is a unique example because sometimes you'll be looking, and this first one might have sent price further away, okay? But then it doesn't matter because then you've got your trend, you've got your bias, haven't you? Then you're waiting, and you could be waiting a day or two, and then it might give you it, okay? But you have your bias. So it does, it just so happens that this particular instance, in this particular example, it stayed pretty flat, which is even more confluence, because if it starts going flat at the bottom here, if you imagine us being short and our target was previous week's low, how many times, it's just missed our TP and it's pulled all the way back on us. That would be quite annoying, wouldn't it? It does that. It's going to bounce, isn't it? Anyway, so it does it again. It comes down. It sort of creates some lows over here, takes the stops out, high, breaks it, yeah, drops in, takes the stops out there. So it creates these little lows, drops in. It has a little stop run up here, but that's not important. Why is that not important? Why would you, because here's a good quick test for you. Here's a good little test for you. What has happened here? Okay, let's imagine we are here. Okay, let's imagine we are here because this is very important. Very important. So price is ripped up here. Okay, it's taken out. It's into the weekly open, and it's had a little stop run in there, right? And then it's broke the low that created the high. Yeah, and now you've price has pulled all the way back up. Stop run again into the weekly open. Low that created the high. Why are you not shorting this? Okay, Zed's answered already. Because of number one. Because of target gap fill. So what you're looking for is the one in the opposite direction to this. You're looking for the long. You're looking for reasons to be able to add longs on. Okay, and like I said here, you got it dropped into these lows, took it out, broke the high there, and then you go. I can do another pair after this if you want another example. No, I have no problem. But then you get, this is a drop into all these lows over here, right? You get the drop. There's the high that created the low. It's there. You see that? Boom, drops, takes all these little lows out. It's a stop run. Then you add on to your position. You can start bringing your stop loss up, bringing your stop loss up, adding another position on, bringing your stop loss up. Entry, stop loss, drag this one up, reduce all your risk, lock in 1R. And then it trends and it hasn't actually give you any other stop runs yet, has it? It's just trended away straight into the target. When it hits this, okay, that's the trade over. Okay, we're not looking for this market to trend for 2 weeks. You can then potentially look for a selling opportunity because, in my opinion, the bias is probably down. I mean, if you look on the H1 and the H4, I mean, that's a big move. It's just retracing it. I think that's a selling opportunity with a risk at the high. If I was going to sell this as a swing trade, risk there, probably sell it now. Um, in inverse, that's quite funny what that's done. Look, you see, it's pulled all the way back to the gap fill on the H4, which is much similar, not too dissimilar, to the one I was looking at, the trade we were looking at the beginning of the week, which is there. Has the breakout, trades all the way back into the gap, H1 gap there. Now, that is the strategy. Okay, the most important things for you to remember is as many confluence factors as you can bring in are excellent. You do not have to use the session open. That's not important. What's important is the structural breaks, the bias, the key swing. Okay, has it taken out a key swing? Has it given me a reason to be bullish or bearish? Yes. Okay. Let price develop. Wait for it to give me a structure, and I'll take the second one. You have a target gap fill. You don't have to target key swings, highs or lows. We're just looking for the market to complete objectives, and that's it. Um, and it's just confluence factors you can add in the session open. You can add in the percentages. We know the chance of it hitting this low rim were very, very low. You don't take out both high and low in a week. It's very, very rare. So I felt confident that it wasn't going to drop and take me out. Now let's forget that idea and come back to the one at the beginning of the week. If you have any questions and if you mark up any charts whilst I'm asleep or any time this week, put them in Legacy Lounge and tag me, and I'll tell you if you're doing it correct, okay? But it's going to take you a few days just to get used to it. But now I want you to have a look at this one because it doesn't necessarily have to. You don't necessarily have to use it on the M3, okay? It's just nice to be able to get your risk in nice and tight. but you can use it as a swing trade strategy. So we took out a key high. So this is a trade at the beginning of the week. Okay, we took out a key high. There's the high. Okay, we now have invalidation. This is the break in the structure. It's broke down here, isn't it? This should hold as resistance. Breaks down, retests. It's a little bit of a different example, but the target was still the same. Yeah, so that was a little bit of a different example. What I was actually looking for here was I knew I had the break in the market structure there. So we had a low, high, lower low, right? It broke down. So I was looking for on a lower time frame. What I should have been looking for, should I say, would have been there's your bias builder. Okay, it's taken out a key high. Now you're looking for a reason to get in. So M3. Now you've got takes out a high there, doesn't it? Breaks the low. Breaks the low that creates the high. There's no entry, doesn't pull back or anything. Does drop, doesn't drop all the way to the gap fill. But then the market, I would have been asleep here anyway, so it's irrelevant. Okay, but I come back the next day, we get a triple stop, takes out the high, breaks the low. Entry's a little bit wide for me, but we now know we've got the bearish pattern again. Okay, because we have a bearish bias. So we're always looking for the bearish pattern because number one, key swing high, breakdown, looking for reasons to get short. What happens? It's going to be very hindsight, but I'm going to say I would have missed the entry. I wouldn't have took that. I don't think I would have took that. Possible that, once it broke this, you wouldn't have shorted that. Okay, you'd have waited for it to. Well, actually, no. I've just seen it where I would have done it. Where you should have done it would have been this. It's come back up. High is held, which is not relevant, but it's had another little stop run. And here's the low that created the high. There's your entry, breakdown, entry, yeah, or even here, stop run. So all it's doing is still bearish. It's still stop running highs and breaking lows. So you're still getting the bearish pattern. There wouldn't have been an entry there, but same pattern, right? So let's, hindsight short. Once we got the stop run there, breaks down, entry, risk the high of the day or the break in the structure. And then you get your short, and your short target was there, wasn't it? That was the target of because we had the bias builder. Okay, or even if you said, okay, there's the break, it pulled back and dropped, I would have took this entry there with a stop wider there. You're still getting the bearish pattern. That's what you're looking for. Bearish, bearish, bearish. You're not looking to go long. You're looking to trade with the market is looking to reverse, and you're looking to trade with it. 6R. Yeah, and SPX, same. No different. So SPX, we went over this morning, but for those that weren't in the stream, the SPX trade I took was exactly the same. I don't know why I closed it when I knew it was going to pump. Stupid. We had, yeah, so we have a bullish bias. Market went sideways. We were looking for it to take a key high or lower out. It did that, which was what? Key high or low was a previous week high, previous week high low, previous day high low. So it took out. This is not important. So what is not important is what? If we have a bullish bias, which of course we have with SPX, of course, then this is not important, is it? Here's the low that created the high. That's probably there. I don't know. There. That's not important, that little stop run, okay? Because we have a bias. Of course, it can fail, but actually the strike rate on this is very, very strong. Very, very good. Over 50%, well over. And now it's, the most important thing is actually being able to get your risk in nice and tight. And I'll give you some really good examples. So it drops in, takes out Monday's low. And on the M15, I just took the entry. There was the high that breaks the low. I didn't need to zoom down. That was as tight as I was going to get in. I just took the entry risk and closed like an idiot. Um, but I'm glad I'm taking the trades, even if I'm closing, because I'm building confidence in the system, which is really, really good. And I'll be hitting these. That's why I've changed my channel. I've got a live trade journal channel. There's going to be a Google sheet in there with an Excel sheet with all the trades that we take. So at least we got one winner today anyway. But these are see so another thing to add to this, okay? You can absolutely trade it in the opposite direction of the trend. Absolutely. But what I've noticed the best thing for you to do is cut at FTA. If you're not in the trend, like for example, well, I mean that is obvious anyway, isn't it? You can always fade a market, but just know that you're um I mean, look at trends. Really, I mean, you may as well go with the trend, mightn't you? You may as well try and get in with the trend. You can always short at a key high or low, but pullbacks on uptrends are small, aren't they? And that's why I think if you're against the trend when you decide to take the pattern, the high-low pattern, if you decide to, like on the M1, like Z takes SPX in any direction, I think the most important thing is to understand that the pullbacks are quite short, which means if you do catch a high, close it at FTA or first gap fill or first support or have very short-term target and get out. Then you can look for the next the you're looking for the high-low pattern in the direction of the trend. Okay, because we know from uptrends and downtrends, if you're going against the trend, the pullbacks are tiny. So you're going to have to, as long as you keep the fade, you can do it, but keep it short term, then you'll do well. Do you have any questions? Because the thing is, right, you can just compound up. You could have compounded probably twice today on UJ. Is it hit target yet? Not yet, is it? How would we have done with SPX? Let's take a look at SPX and see. So once you're in and you've got your first entry, even though I took an M15 entry here, you can drop it and you've got your bias. And to be honest, this is a little bit different. This is more of a more of a different strategy. This is kind of we already had the bias, and this one is further up the trend anyway, isn't it? There's plenty of these stop runs previously, so um, and there was, I mean, and a good example was that we had this plan last week. Do you remember? Monday, what happened? I actually posted in my channel, when it takes out Tuesday and Monday's high, we go long, drop straight in, breaks above, and you're going with the trend. What does it do? It explodes to the upside. We missed that one, which is disappointing. So it's the same this week. I said take Monday's low, boom. Once it does, I'm in. Um, but if you drop to the M3, you probably, if you look, you can probably get in again. So even if you miss the first one, even if you miss the first one, um, even if you miss the first one, you have yeah, you have another one in there. So let's get rid of that. So you have the first one, which is a little stop running into Monday's low, and that low there, there's the high. So even if even if you say, okay, well, I don't really have a bias on SPX, this could be any market. It's just price action, isn't it? But now I do have a bias, which is bullish, isn't it? It's taken out previous day's low. It's giving us our pattern. Boom. You're not looking for entry on it. It doesn't matter. It's no problem. Okay. Little stop run in there. Isn't it? Little stop run, boom. There's the high. Breaks it. There's your entry. Risk. Entry. Why have I just randomly picked this? I haven't randomly picked this, have I? This was just market structure. High, low, lower high, lower low, lower high, lower low. But then what happened? It shifted. So then you have a little stop run, and there you have the pattern. So you're not, there's nothing random about it. It's just simple market structure. There, the most important thing on this little downtrend here was once it had taken this low out, it found enough liquidity to be able to break structure, didn't it? So that was the important little low it had taken out. It took out this low, took out this little low here, and that was the important one because that one gave us the imbalance in price. Then there was the high that created the low. Entry, risk, okay? Drops in, stop run again, breaks the high. No entry, okay? I don't think it gave you another one, did it? It wasn't any pullback. I mean, imagine we took that one. There. A little bit wider for spread, okay? And you wouldn't have had any opportunity to pull it back 10R with ease in 4, 5, 6, 7, 8 hours. And this keeps happening because this market is bouncing high, low, high, low, high, low. So this is the strategy for you. So now what you're looking for is, well, look, you've got your bias there. Boom. Once it's taken out that low, that was important. It took out this big stop over here. Why was this low important? Because this is the one that gave it enough liquidity to bounce. Entry long. If you're not in and you don't have a bias, then that's fine. This is now your bias. So now you're looking, okay, boom, there's another stop run in there. Broke out, untested gap. So if it comes all the way back up to the high, let's say, and it takes that out, and then it goes really bearish, you know you've got an unfilled gap here, haven't you? So you can target that on, and that could then put in a higher low, and then we could continue on the trend, and that could be your fade. So you can build into other trade ideas from this same pattern. And now what you're waiting for, if you don't have an entry on SPX, you now have your bias. You now have your second one, which didn't fill. So you're waiting for tomorrow for some more price to develop. And then you're waiting for boom, lows, break, entry, risk. See you later. All-time high. Okay? Clear? But if I've confused you, it's okay because I'm going to make a lesson with lots of live examples, not just hindsight examples. You're going to have live examples. And the reason for the bias one at the beginning is because I think it allows you, um, it gives you a higher strike rate. I think if you take the one right at the beginning, it's kind of nervous and you're a little bit edgy and you cut the trade short. Says he who cut 4 trades short this week. But I think once you've got one and you've got a key high low, then key swing, key high low in it, you've got a high low into a key swing, and then you've got your second pattern. Then I think you have more confidence to either add, 2% risk, or just hold the trade to higher targets and look to compound into it. That's most important. You don't have to pick top or bottom anymore, okay? Which is still fine for you to do that, and I know you're doing that very well. But I think this is an extension onto that, so you can build into the trade. What we're looking for 6, 7, 8, 9 hours, but if we can compound into them and get some fairly decent swings out of them, we can hit some 40 hours like icy snow. Okay, hope you enjoyed the stream. I'm not going to go over any FX because a lot of it I really don't know what it's doing, because I'm not sure if dollar's going to bounce here. What we do know is, we just quickly glance at it. So dollar is coming into the level we've been looking at for fucking ages, which is this. I said once it loses this pink, I don't see why it bounced there. It's now coming into there, but to be honest, I don't see why it can't come all the way back down to here. Um, I don't know. If they keep printing it into oblivion, it might just do it, mightn't it? So, dollar, not sure, but I think, sometimes dollar has a little bounce when people least expect it. What we do know is that we've got the trend is still intact, isn't it? We got a low, we got a lower high, we got another lower low. So even if it does bounce, we're going to look to sell euros, buy Swissy, um, and then I'm fully expecting it wherever it bounces to continue down. But that's obviously we'll come to that when it matters. But at the moment, I mean, this is just parabolic, and I think it's just going to go for high after high, and that's a big high there. That's 2008 high, 2018 high. Oh no, the 2018 high is up here. Ain't it funny, right? How no matter what happens, you don't even have to have support and resistance on these markets. You don't even need that, right? You can just see that just when the market thinks a top's in or a bottom, absolutely not. Stop run. Absolutely not. Stop run. Always the same. You can literally pick. Um, is it SPX? I don't know if you know this. It's going to make you really laugh, but if I can find the proper one that goes back to the 1920s, I don't know if it's the Nasdaq. It might be the original SPX. It doesn't go this far on here, does it? It actually, is it the Dow? Is it? Do you know what I'm gonna do? One of them went back to the 1920s. I don't know which one it was. It should be this one. Yeah, here it is. Just a cheeky little stop run in there before Industrial Revolution. What was this? I don't know what this was. I've forgotten. In the 20s. I guess that was the virus, wasn't it? The Roaring Twenties, yeah. Was it? I thought it was Industrial Revolution. I forget the name, what they called it, but either way, the Industrial Revolution couldn't begin until we got a Tom Dante SFP, and once we broke structure, then and then you're in, and then you got a little stop run in there. Look, boom, and then we've got Z is absolutely buzzing because he's got the break high low and he's entered there tight risk. Fred has entered as well. Oh, wrong one. They don't want to go short, do they? Fred has entered as well. Just in 1923, Fred has entered. I've actually closed the trade here at this high, and gone to bed. Uh, Zed's had like 3 or 4 trades in this area. Fred's actually gone to work, not came home for 7 years, and he says, "Oh lads, I just closed the trade 32. Ah, thanks." But it's funny though, it doesn't change though, huh? It's all the same. Same. That's why price action is the most amazing. You can't beat it. No matter how many indicators you use, you just cannot beat it. Here, look. Boom. Where's the high that created the low? There. Lovely little. This was probably, I think what we're going to call this one is the Jesse Livermore swing strategy. Because he definitely took that, didn't he? Without a doubt. Look at that. Off that same pattern. Oh, fuck it hell. Oh, there we go. But he's dead now, isn't he? So by 1990, he's definitely dead. 300R if you held it. Right, I hope you enjoyed the stream. And I'll see you tomorrow. At least we've got one winner. I'm not sure about Bitcoin. Let's just quickly have a look at it before I go. It's not looking hot, is it? This is where you'd want it to reject if you want it to um, if you want it to be bearish, right? You want it to start rejecting off resistances and breaking lows. So what we know is that once it breaks this high, if it breaks this high, that's the shift. Okay? If it, I mean, it could come into here. It's possible that it comes into here and then breaks that high. It's still possible, but I think if you're in a short, you can hold it as long as you want. I mean, I really don't know. I don't have an opinion, but I do have a plan, and I'll come back to it tomorrow and I'll see where we are. If you're long BTC, would you move your stop to that low? Um, no, I would. If I was you, if you're going to move your stop to that low, why not just close the trade? Probability of it being hit, strong, $30. If you got 10 BTC on that, that's $300. Probability of it being hit seems, I mean, it's possible. It's possible it gets hit. And it might get hit and then continue to move away. I think what you could do in this situation, if you are long, would be this, okay? What I don't think it's going to do, don't want to jinx it, I don't think it's going to do that, okay? What I think it might do is that, and then on the pullback, you can exit your trade. There might be tons of longs that have just dived in here and placed a stop down cross. But if it doesn't hit it, or if it does hit it and your stop's there, and then it bounces from there and goes higher, then you're going to be disappointed. You may as well try and, if you're in a long, you may as well try and hold it because this breakout might hold. It's possible it might hold, and it would be worth it to hold it because the upside is another $200 or $300, and then I think we go. I think if it does that, then I think we look for the short. I think it would be too much for it. If it took that high out, I think it'd probably be a pretty heavy drop. A bit like this one. Um, it starts kind of looking bearish there, but then it goes one more up, takes all these highs out into the gap, and then it just falls off. I think it's possible to do something like that, but I think it needs to take another high before it drops rapidly. I've seen some traders today that are sort of bidding this level, and I really don't know why. I think that's crazy. To be bidding that level, if that comes back down there, for me, that's mega bearish. We know when Bitcoin breaks out, it holds. You know, you don't want it to. It's a bit like this. It breaks out. It's possible it's currently doing something like this where it breaks, then breaks the high, and then we look for the long. We all know that if Bitcoin breaks out, it normally holds and doesn't pull back to clean support. So I don't understand. Don't do that. If you're going to do that, don't do that. An example would be it broke out here. It's like putting, you broke out, you've missed it. It's like putting an order there, limit order there to buy it with your stop there. It's stupid. It just shits through it, doesn't it? Bitcoin doesn't do that. It's like it breaking out here, and then you go, and when it comes back here, I'm going to buy it. No, it just completely collapses through. When Bitcoin breaks out, it does this drop, and then it'll do maybe that, and then again, and it'll do the same shit. It just won't let you in. It just will not let you in. That's why you have to be very, very inventive and get the structure pattern on there. Boom. So I think if it's gonna go, might be worth holding. So if I was you, honestly, I'd hold it. I think I'd hold it. Because what's the worst case? You get out a break even, you lost nothing. But the potential upside, you don't know. You don't actually know, but nobody actually knows if it's going to do that over the next 2 or 3 days. If this goes to all-time high, then it's a no-brainer. And for me, this is possible that it goes to all-time high. It's very possible at this point. It's not far away anymore. It's there. It's 130 points, and it does 130. It's done 130 points this week. I think if you can hold it, I would definitely risk it for the break even or even the 1 hour loss, rather than taking a little bit of profit. You might regret it, because this is only the first little breakout. If it fully retraces, then we go short. You make the money back on the opposite side of the trade. Um, but if you've got strong hands, you can hold the trade like icy snow, then you might be able to run it up, and we can also look for another entry above here. Boom. Okay. And also you got a pretty strong daily close previously, so it might actually hold. And it is, like we said, it is on top of daily support. So might be worth holding the trade and seeing how the daily candle closes. Then you can say, okay, then tomorrow I'm going to look at it again. Just in case. You never know how far Bitcoin could move up. Today's low on SPX is safe for stop loss. Easily. I don't think it'll ever touch it in its fucking entire history again. It doesn't even take lows out anymore, does it, once it moves away? Yeah, I mean, it took out previous day's low there. That's nice. Yeah, it shouldn't really come back down there, should it? It's above Monday's high now, isn't it? Should be a breakout. Should be looking for this. And honestly, this maybe not this week, but I think next week. I think we might get a parabolic move like this part where it's grinding, 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 and then it's going to go in 1 or 2 candles all-time high. Okay, I hope you enjoyed the stream. This has been a long time recording. Stop.